afternoon, everyone. Let me first begin by saying congratulations to Eric, Alice, Mary for organizing a really nice, well-run conference, and thank you for giving me the opportunity to come and speak to you a little bit about the research that I've been doing over the last few years with some of my graduate students, where essentially we've been using large census microdata files to build new detailed regional data sets that allow us to start unpacking and exploring some of these spatial inequalities in Canada. So we're all familiar with the context, right? The topic of inequality kind of resurfaces, comes center stage on the public forum with the Occupy movement in 2011, and it kind of amplifies from there on with subsequent protest movements. We can think of Brexit in the UK, the Yellow Vest movements in France, right? And if we look at, the weekly news cycle, every other day, there seems to be these days a new report or article that comes out on the topic. So we're finally paying more attention to this particular issue. And when we look at it at the global scale, right, the big picture really is one where there are two sides to the story, right? So for most of the 20th century, between country inequalities are increasing, but from 1980 onwards, between country inequalities are getting smaller and smaller, right? Of course, the corollary to that is that within country inequalities are increasing and in effect are now larger than those differences between countries. So where is that coming from? So we're all accustomed now to seeing these Piketty type graphs, right, which are tax data going back a long way, looking at the national income share held by the top 1%. So if we look at Canada, the US, and France, which have the longest time series here, we can see that prior to World War II, levels of inequality are considerably high. They drop significantly following the war. They remain stable and relatively low throughout the 50s, 60s, and 70s, a period which we often refer to as the Great Compression. But as the 1980s roll in, right, these levels of inequalities start to tick upwards again, right? And if we look at the US, by far the highest level of inequality. The trends in Canada, the red dashed line that you see here, mimic those observed for the US, but with somewhat of a 10-year lag. And one of the big differences is that inequality in Canada really shoots up quite quickly throughout the 1990s. It peaks around 2006, drops a little bit, but what we see over the last 15 or so years is kind of a seesaw pattern. There's a little bit more volatility, and those levels of inequality remain historically high compared to what was happening 40 or 50 years ago. So this has led to a burgeoning literature in regional economics and economic geography, thinking about what the spatial dimensions are of these within-country increases in inequality. So in the US, right, Moretti and Menduca have been writing about the great divergence that's taken place since the 1980s. More recently, Kemeny and Storper have done some interesting work looking at spatial inequality and how it's really being driven by a few superstar regions. In Europe, this transition from a period of convergence to divergence is referred to as the great inversions, that is. And Rodriguez-Pose has done some interesting work talking about the revenge of places that don't matter, or more recently, left behind places. In China, there's also a very vibrant literature looking at differences across urban and rural regions throughout the countries. So what's the literature in Canada like, right? Traditionally, the focus in Canada has been on interprovincial disparities, especially when it comes to long-term series, and a lot of the heavy lifting here has been done by economists. There's a very vibrant literature looking at neighborhood-level inequalities across or within cities, that is, coming from the sociological field, right? People like David Holchansky, John Miles, and Hu. More recently, though, I would say that there's also growing interest in the regional dynamics of inequality, what happens below the provincial scale. And that interest, in large part, comes from the fact that spatial inequality is increasingly seen as a drag on national economic performance, right? Those lagging regions are not maximizing their potential, and also, maybe drawing on what are considered to be inefficient transfers from various levels of government. But it's also part of a larger or broader debate on concerns about more inclusive growth, right? And whether or not, federal agencies should be thinking about more policies that are place sensitive, right? So some of these issues are being hotly debated. So what I want to do for the remaining 10 minutes or so I have here is show you what some of these inter and intra-regional trends are in terms of spatial inequalities within Canada. And what we're going to do here is think about regions as census divisions in the Canadian context. These are administrative regions, right? And just to give you an idea here, across the 10 provinces and 3 territories, we have about 284 of these regions. By looking at this finer grain spatial disaggregation, we can start unpacking some of these spatial inequalities. But just to set the scene a little bit, let me start off with a longer time series looking at provincial disparities, right? So what we have in blue here is the standard deviation of GDP per capita across provinces, right? So there's a lot of volatility. What we've done here is simply fit a polynomial to kind of catch the overall trend. And what do we see? Well, from the 1960s up until the mid-1990s, that trend line is heading downwards, right? So we could characterize this as a period of sigma convergence. Those interprovincial disparities are getting smaller and smaller over time. The trend line flattens out from the mid-1990s onwards, and what we have is a much more volatile period, right? Kind of episodic periods of divergence and convergence on the one hand. So what's interesting in the Canadian context is that these typically track what's happening in terms of energy resources. So here what I've done is simply overlay the Bank of Canada's energy price index in red here, and as you can see, as oil and gas prices tend to go up, we have periods of divergence. When they go down, we have periods of convergence, right? So this is the kind of importance of the commodity boom bust cycle we have across those provincial economies. But of course, what we want to do is focus on the more recent period of this flattening out, the cessation of convergence, if you will, and think about it in more regional terms. So let's start doing this here. What we have in the blue bars are the national Gini coefficients, right? For Canada, they kind of track those patterns we've described. They increase significantly in the 1990s, peak in 2006, go down, back up again, right? That increased volatility. I've included the latest numbers from the 2021 census, right? And you can see the Gini coefficient has been compressed. Remember, a lot of this has to do with the fact that total income is more evenly distributed because of government income support programs of various kinds. So what happens in our latest census, StatsCan also provides us with income for 2019, which is probably a better reflection of overall patterns of inequality. But what's really important for our part of the story here are these two lines. Here we have the coefficient of variation for mean regional incomes in green, right? So this is our measure of interregional inequality. It increases up until 2016 and then trends downwards a little bit in 2019, right? And the red line here is the variation across regional Gini coefficients. This one increases much more rapidly and remains very high even in 2016 and 2019, though it flattens out a little bit, right? This is the one that we're really interested in. What explains this heterogeneity in terms of regional Gini coefficients, right? So that's where we start situating the problem, and as geographers, of course, we want to map things out, right? So on the left-hand side, what you have here are the regional Gini coefficients for 2019. These are cluster maps. So the darker red shaded areas are regions with higher levels of inequality, surrounded by regions with similarly higher levels of inequality, and in blue we have the pockets of low levels of inequality. So what do we see? There are two things that really stand out. If you scan the country here from east to west, there is clearly an east to west divide, right? Regions in the western parts of the country typically have much higher levels of inequality. The second spatial trend, which is kind of hard to make out here unless you're really familiar with the Canadian geography, is that there's an important urban-rural gap, right? Urban areas have much higher levels of inequality compared to most rural areas. The right-hand side map here is similar in patterns, but what we're mapping here are the clusters of changes in regional Gini coefficients over that 40-year period. Okay? So let me say a little bit more about the rural-urban gap we are observing. So what we do here is a simple classification of all of those 284 regions, right, as whether or not they are metropolitan or non-metropolitan regions. In red, what we have are large metropolitan regions, medium-sized metropolitan regions. These are essentially defined as how much individuals in a region reside in a city of 1.5 million or above, or 250,000 to 1.5 million, which would be medium, right? And then the non-metropolitan regions are in green or gray, and these are going to be associated as to whether or not they are closely situated within a metropolitan region, and we use a 60-minute driving radius to classify those regions, right? So by looking at this chart, what really strikes us here is from the 1990s onwards, right, when we're transitioning towards that period of higher volatility, growing divergence, et cetera, it's really all about the large metropolitan regions, right? That's where the inequality is being concentrated more and more over time, and you can see that that gap remains quite significant. So these large metropolitan areas are kind of considered to be the cauldrons of inequality. So then the question we want to ask ourselves is, why is that the case, right? So here we have kind of a high-level overview of a conceptual framework that allows us to think a little bit more about what are the drivers of those patterns of regional inequality and what are their consequences. So in terms of the causes here, right, we can think about different secular trends or macro forces, think technological change, international trade, right? Then we can also zoom into what's going on at the local level to look at differences in the industrial composition, levels of economic development, socio-demographic factors, of course, are really important, local institutional factors, right? So there's not one smoking gun, there are many different variables to consider. And on the consequences side, what are the impacts of inequality in terms of economic growth, health outcomes, and environmental outcomes, right? But given the pattern we observed previously in terms of those large metropolitan areas, one area where we've been paying particular attention to these days is technological change, right? Which we suspect is highly concentrated in some of those larger metropolitan areas. This is what we have here. This is a simple cross-section for 2016 where we look at regional Gini coefficients and the relation to a proxy of innovation where we use patent data, right, to measure what innovation is across those regions. Each region here is population weighted, so what do we see? Well, not surprisingly, the larger regions are the ones that have the higher levels of inequality, right? But there's also clearly a positive relationship between innovation and inequality. Those most innovating regions are also the ones that have the higher levels of inequality, right, as a general trend. Now, this is only one cross-section, so what we also do is use the full panel, the 40 years of data that we have here, to estimate a series of spatial panel regression models, right? Some of them here starting off as parsimonious models, but we also have fully specified models, right, with a series of control variables reflecting that conceptual framework we talked about earlier on. And there's a lot of information here, but just focus on the first two rows here. What's going on? Population size is always positive and significant, not surprisingly, but so is innovation, right? So these are the first set of results for Canada where we've been able to estimate, using that patent data, a proxy for innovation to kind of tease out that relationship. And if we look at all of the other control variables, right, they all pretty much behave as we would expect them. For instance, regions that have higher levels of manufacturing activity tend to have lower levels of inequality, right? And the list goes down. The last column we have here is just one of those many sensitivity tests we do, running different iterations of models for robustness checks, right? Here we actually limit those patents to what we call tier 1 high-tech sectors, the ones that file the most patents, think computer sciences, life sciences, etc. And if you look at the coefficient estimate, right, not surprisingly, it's actually higher. So the relationship between innovation and inequality is even stronger in this particular case. Now, another project that we've been working on is thinking about what's happening or will happen in the future, right, in terms of the impacts of automation. So we adopted the Frey and Osborne work where they look at high-risk occupations, right, of being automated over the next 5 to 10 years. We adopted that occupational framework to the census data in Canada to develop regional estimates of high-risk impact regions, right? So what you have on the left-hand side here is that map of those regions that are considered to be the most at risk in terms of automation. This map looks significantly different from the other ones that I showed you early, right? The high clusters are all in eastern Canada in this case, right? Particularly in Quebec and the Maritime provinces. These are regions where occupations are highly concentrated in things like traditional primary resource sectors, forestry, fishing, certain industrial activities. Those are the most at risk. Now, why is this worrisome? When we overlay a map of inequality to these regions, remember they were initially the ones that had the lowest levels of inequality. Now all of a sudden they are identified as part of those outliers of clusters, right? So in other words, things could flip very quickly and the distributional impacts could be very harsh for those regions depending on how automation evolves. So let me conclude here with a few lessons that we've learned by mapping these spatial dimensions of inequality, right? Higher levels of inequality, both inter and intra-regional, more volatility, east-west divide, growing urban-rural gap, right? One which is tied to large metropolitan regions pulling ahead or away from others. What are the main drivers? There are several factors. One that we're really kind of focusing on and need to pay more attention about is innovation. This is something that's quite new. There are a series of papers coming out on this. So we're going to pay more attention to that. And of course, then the next question, just to close off here, is what can we do in terms of the policy implications? What's interesting here is that in Canada, the federal government was quite active in terms of regional development policies, experimenting with an alphabet soup of different policies being rolled out through the 70s and 80s. That changed in the 1990s, where it was all about industrial policy, which was aspatial, right? So the question again comes to whether or not we should reconsider or revisit some of these place-sensitive development policies. And of course, this ties into broader debates about inclusive growth, left behind places, and quality of jobs, something that we're also looking into. All right, I'll stop on that note. Hopefully I'm on time and looking forward to questions afterwards. Thank you.